I often get asked, can the FTX collapse spill over into the traditional finance system? And the answer is, it just did in the form of Silvergate. Now, Silvergate is the bank that is at the center of the wretched hive of scum and villainy that is the cryptocurrency industry. And check this out, hitting the tape just this morning, Silvergate tumbles after FTX implosion prompts an $8.1 billion bank run. Customers withdrew $8.1 billion of digital asset deposits, and the collapse of crypto exchange FTX leaves Silvergate reeling. And just how bad was it? Well, just to give you an idea, at the start of the fourth quarter, Silvergate had somewhere around $11.6 billion in total deposits. So an $8.1 billion bank run. That means almost everybody took their money out of Silvergate after the collapse of FTX. They went down as low as $3.5 billion in deposits. Now they say they're back up to about $3.8. The companies now had to lay off 40% of their staff, somewhere around 200 employees, and they were forced to sell a lot of the debt instruments that they were holding on their books as assets in order to raise the money to meet those withdrawals. That forced them to take a $718 million loss on the sale of those assets. On top of that, they took another $196 million in losses because they had to abandon a plan to launch a blockchain-based digital payment solution, something they bought from Facebook a couple of years ago. You might recall Facebook's failed attempt to get into the digital payment space. Well, Silvergate was the outfit that bought that technology from Facebook. Now Silvergate is abandoning that plan as well, losing almost $200 million in the process. Now Silvergate claims the worst is behind them. They're telling us they've still got $4.6 billion worth of assets and that those are backing up only $3.8 billion worth of deposits. So according to Silvergate, they're telling us they're still solvent. But there are red flags aplenty around Silvergate Bank that makes me think, maybe not so much. First of all, let's talk about this little beauty I highlighted right here. This news that they announced today, this was select, unaudited, and preliminary financial metrics, which means they have not told us the whole story. Select means we cherry pick the data points we want to give you. Unaudited means take my word for it. Nobody has dug into our books and verified this information. And preliminary means, this is just the first round. So that tells me this news is going to get a whole heck of a lot worse on Tuesday, January 17th, when Silvergate reports their actual earnings. And Silvergate shareholders are not so impressed with this news, nor are they reassured by what the CEO is telling them. Take a look at that drop in the stock this morning. Silvergate, as of the making of this video, down more than 42% just today. Of course, that's after a rally of 28% yesterday. But, when a stock rallies 28% one day and then craters 42% the next day, I'm sure that's totally legitimate organic price movement. Nothing to see here. Let's move on. Now, at the center of this whole fiasco is something called the Silvergate Exchange Network, or SEN. And that's a unique business model that Silvergate Bank came up with that allows real-time 24/7 movement of dollars in exchange for crypto assets. And that's something that crypto platforms have been drawn to. It's the same platform that Michael Saylor famously used to take out his $205 million loan in order to buy Bitcoin. Of course, he collateralized that loan using Bitcoin that he already owned. So borrowing against your Bitcoin to get more dollars to buy more Bitcoin, to call that risky, that's putting it mildly. And of course, this wasn't anywhere near the riskiest venture that Silvergate got into. Of course, Silvergate famously is the bank that was servicing FTX customers. This is Silvergate CEO Alan Lane. Now, he has assured us that Silvergate did a deep dive and thorough due diligence on FTX before the collapse, which is interesting because FTX didn't even have an accounting department. So how do you do a thorough deep dive on somebody who doesn't have an accountant? Let's leave that alone for now. Silvergate famously last month released this statement saying, "We conducted extensive due diligence on FTX and Alameda Research." Reading from Alan Lane's statement, Silvergate conducted significant due diligence on FTX and its related entities, including Alameda Research, both during the onboarding process and through ongoing monitoring in accordance with our risk management policies and procedures and the requirements outlined above. Alameda Research operated an over-the-counter trading firm, and individuals or entities engaged in OTC trades with Alameda would have been instructed by Alameda to send funds to Alameda's account, whether at Silvergate or any other banking partners. Well, that's accurate, but it wasn't people doing business with Alameda Research that were being told to wire money to Alameda. It was people doing business with FTX who were told to wire money to Alameda. Millions of FTX customers, including a lot of folks here in the US, thought they were sending money to FTX in order to fund their accounts to buy Bitcoin and other cryptos. but really they were sending the money to Alameda Research. You got to read those wiring instructions carefully, folks. Lane went on to say further, when a wire is originated, the individual or entity sending the funds instructs every detail to their bank, including to whom they want the funds sent. A receiving bank validates the name of the beneficiary, matches the name on the account, and credits it accordingly. When Silvergate received payments directed to Alameda Research and credited to the account of the same name, this was consistent with the instructions from the sender of the wire and industry practice. So what Lane is saying in this statement here is, look, millions of FTX customers sent money to Alameda, and so we put the money in Alameda's account. What he's leaving out here is that his bank should have flagged those transactions because they were fraudulent. Millions of people were sending money they thought to FTX, but it was actually going to Alameda. His risk people and his compliance people didn't catch that, didn't flag it as unusual, and now he's saying, well, we did what people told us to do, so it's not our fault. And by the way, who were those risk management people at Silvergate Bank who would have been the ones to catch these Alameda transactions and flag them as potentially fraudulent? Well, it was this guy, Mr. Tyler Pearson. He's the CEO's son-in-law. Yeah, the CEO's son-in-law was the chief risk officer at a bank that had $11.6 billion worth of deposits at it. That's right, folks. Nepotism. You can sprinkle that on top of the red flags that are all over the crypto industry that include, let's see, Ponzi schemes, rug pulls, and polyamorous penthouse polycules. Somebody please explain to me what that means. Folks, it is so important that you understand who you're doing business with. Before you wire money, before you start accounts, you have to look up these institutions. Who is the CEO? Who do they do business with? Who do they bank with? How do they do business? There are so many red flags around these institutions that nobody caught. Everybody just kept sending money to them. Why? Because number go up. Nobody was asking questions. The time to ask questions is when the number is going up, when times are good. You don't start asking these kinds of questions after everything has collapsed. And speaking of after everything has collapsed, besides FTX, here is the list of wonderful suspects that Silvergate Exchange Network currently does business with. Let's see, we've got Genesis up here. Genesis halted withdrawals almost a month and a half ago. They haven't filed for bankruptcy yet, but let's be honest with you folks, their bankruptcy is just days away. Oh, on top of that, we've got Gemini here. Gemini also halted withdrawals from Gemini Earn. Why? Because Genesis owed $900 million to Gemini, so now they're going bankrupt too. Oh, and look right next to Gemini there, we've got Binance US. Sure, why not? Binance, run by Changpeng Zhou, who is arguably the biggest dirtbag in the entire crypto industry. And that is not a term I throw around lightly, folks. Suffice it to say, Silvergate is not done hemorrhaging cash. There is nothing good coming out of this company. These were unaudited, select, preliminary results that are going to get worse before they get better. Again, folks, it is so important that you understand who you're doing business with. You have to research these people and these institutions. There are so many red flags in this industry. And for the 1,000,005th time on this channel, please take your coins off the exchanges. If you leave your coins on the exchange, you are nothing more than an unsecured creditor of an unreliable borrower. Me personally, I buy my crypto through Swan and then I immediately withdraw from the exchange onto my Ledger Nano X. There are affiliate links down below to those things if you want to check them out. Again, those are affiliate links and I'll always disclose when I use them. I'm going to go out on a limb here and say Silvergate probably won't be around this time next year. And until next time, live small and dream big.